welcome. My name is Will Trevor. I am Director of Programs and Operations here at the Tufts Gordon Institute at Tufts University. Welcome to you. Welcome to our keynote debate. Passing fad or game changer, should we embrace cryptocurrency? Now, the aim of these debates is to bring together a group of leading thinkers, both practitioners and academics, to discuss and debate a topical issue at the intersection of leadership, innovation, management and entrepreneurship. And our aim is to help nurture and develop the next generation of transformational leaders who act with purpose and heart and are informed about the relevant topics of the day. Now, before we get started, I'd like to introduce Kevin O'Hay. He's our Executive Director of the Tufts Gordon Institute. I'd like to say a few words by way of introduction.
Yes, thank you, Will, and thank you to all the panelists who are helping us out today and to all the attendees. As Will pointed out, this series, we hope, will be a forum for all of us to learn. So we take no sides on these issues. We think that for many of these issues, the best thing to do is to create opportunities for us to hear each other, to hear all aspects. And so particularly with these emerging issues and emerging technologies, it's important for all of us to have an opportunity to hear all aspects and all perspectives on these kinds of issues. So today's session around crypto, I think, is very timely. And I'm looking forward to all of you being able to hear the different perspectives and the different viewpoints from on this issue from the multiple panelists. So I thank all the panelists for carving time at a very busy time of year to share your thoughts with the panel. And I look forward to learning from all of you. So thank you very much for joining, and we'll look forward to a great event.
Thanks, Kevin. I will just introduce the panelists. We're very pleased to be joined by Alexandra Andhoff, who joined us very much at the last moment. We're delighted to have her. She's an Associate Professor in Corporate Law, Law and Technology at the University of Copenhagen. It's obviously evening where you are, Alexandra, but thanks for joining us. You're going to find my colleague Jill has just posted into the chat a link to the more detailed bios. So we're also joined by George Blount. George is Managing Director of N-Balance Financial here in Boston. And welcome to you, George. We're also joined by Patrick Merck, who's President and CLO at Transparent Financial Systems and also of Harvard University. Patrick, welcome to you. We're also joined by Jimmy Nguyen, who is President of the Bitcoin Association. Jimmy, very welcome to you. We had, unfortunately, one of our panelists was unable to attend because of a family matter. Thomas Strolight has joined us in their place, very welcome to you, Toma. Toma is Editor-in-Chief at Swan Bitcoin. Now, I just want to do just a quick brief mention of what we do here at the Tufts Gordon Institute. Now, we offer a range of programs from undergraduate through to professional education. Now, in spring of 2022, the Tufts Gordon Institute, we launched a redesigned MS in engineering management, and it leverages the best of our award-winning on-campus and online MSEM programs, and we re-envisioned it into a single top-tier graduate program that prepares leaders for the new world of work. Not only does the Tufts MSEM deliver relevant content and practical skills that you need to thrive in an increasing complex and rapidly changing world, but it also provides you with an exceptional part-time experience that you can fit into your busy life. Not only that, we offer an MS in innovation management. We'll be popping a link in the chat for you to be able to take a look at that. And we run all the way through to professional education. We have, for example, got a data analytics for managers master track certificate that we offer via Coursera. Along with that, there's a whole range of these different activities that we have through our colleagues in the Derby Entrepreneurship Centre, and also these keynote debates, which we have every couple of months. If you want to find out more about that, visit us on gordon.tufts.edu. So we will have we'll also have a keynote debate in a few weeks' time, which will be leadership in the post-pandemic post-pandemic world, do we need to rethink the role of the leader? And that's going to be Wednesday, May the 25th to 12:30 to 2 Eastern Daylight Time. In a moment, I'm going to call upon each of the panelists just to take about 5 minutes to make a pitch. What we've tried to do with these keynote debates is make them a bit like an Oxford Union debate, if you're familiar with that format. Folks speaking either for or against a motion in a loose kind of way. We're not going to be strictly enforcing that. So if you can make a pitch, panelists, either for or against the motion under discussion, that's should we embrace cryptocurrencies? Then around about 1 o'clock Eastern time, we're going to start a discussion amongst the panelists. We've got some tentative questions to ask. We're also going to crowdsource the questions in the Q&A from the folks on the webinar. So if you can post your questions into the Q&A, that will be appreciated. Panelists, can I remind you that we have an informed and an interested audience, but not everyone is a specialist in the field of cryptocurrencies. So if you're using and mentioning industry terms and concepts that you think may be unfamiliar to a general audience, then I'd be grateful if you could perhaps give us some further explanation or definition to aid understanding. So Jimmy, do you want to kick us off with perhaps your 5-minute pitch? Should we embrace cryptocurrencies?
My short answer is we should embrace cryptocurrencies, but not in the cryptocurrency craze that has happened over the last few years, but instead to embrace a use of digital currency at massive scale to create a more efficient financial system for the world. So let me explain what I mean by that. First of all, I'm founding president of an association that supports a competing version of Bitcoin, not the BTC ticker symbol that most people are familiar with. Ours is called BSV, or Bitcoin Satoshi Vision. And the reason we support that is it explains a lot of the questions I get around the world about Bitcoin, which is really, what is it used for? What are all these cryptocurrencies used for? And the short answer I'd give you is that most of the cryptocurrencies that exist today are not necessary. And this is what confuses people when they're getting into the field. They don't understand what they're used for. And the short answer is most of the cryptocurrencies don't have a lot of inherent value. I would encourage people to go back to what Bitcoin was created to be in the first place. You've actually read the Satoshi Nakamoto white paper, which was posted in 2008 to the internet, which birthed a lot of this industry. It was trying to solve a simple problem, which is the internet is a powerful way to distribute data, but it did not create a native, efficient way to send financial payments or monetary value. So what we had to live with is layering on intermediaries such as payment processors, PayPal, those kinds of services, which all add time and fees. So that's why on the internet, you cannot send efficiently small amounts of money. Bitcoin was created to try and solve that, to send in a peer-to-peer electronic cash system, which is the title of the Bitcoin white paper. The ability for me to send to Will anywhere in the world, not just big amounts of money, but small casual transactions, which is a phrase that's used in the Bitcoin white paper. That's what it was designed to solve, so that we could send across the internet, not just $1 million US, but even 1 penny efficiently. Unfortunately, that's not Bitcoin and other cryptocurrencies have become because of scaling challenges and other battles in the cryptocurrency world. BTC's version of Bitcoin is not really used for daily payments, even though that's what it was intended to be used for. And then we birthed this industry of now well over 12, 13,000 cryptocurrencies, which mostly, in my view, are unnecessary and have become part of a speculative gambling market with cryptocurrency trading, where people have realized I can make money just by trading coins. That's not the world I want to see, and that's not the world I would encourage everyone to embrace, because it means a world where cryptocurrency's value is just from trading of a speculative asset on exchanges, as opposed to being really used in daily life. I would encourage you to embrace a world where, whether it's our version of Bitcoin, BSV, or some other digital currencies, they're used to create more efficient remittance payments, sending money across international boundaries, changing our internet so that instead of these free services we have, but we have to live with companies selling our data to advertisers, we can actually exchange tiny bits of value. Every time you do an internet search or like a social media post, you might actually earn money as opposed to the internet service providers earning money. Or creating systems where we can actually have better financial inclusion services, peer-to-peer micro-lending, having the ability for developing countries to be able to have people earn small bits of money through games, play-to-earn games and apps. That's the world I want to see, and that requires a Bitcoin at scale like ours, which can power transaction capacity so efficient you can send a payment for 1/20th to 1/100th of a US cent. And therefore you can send 1 penny efficiently, whereas most of the other cryptocurrencies don't have that type of efficiency, and that's why you're not seeing them used for daily payments or much of anything else besides speculative casino gambling. So that's the world I would embrace, and that's the world I encourage all of you to embrace.
Thanks, Jimmy. Thanks for getting us started. Whilst you were speaking, I did launch a quick poll just to get the temperature with our audience. I asked the very same question to them: passing fad or game changer. At the moment, we have game changer well in the lead at 72%, passing fad at 28%. I'll leave that poll just open a little bit longer now, and then I'll publish it in a moment. Toma, same question to you: passing fad or game changer? Should we be embracing cryptocurrencies?
Yeah, we'll see where people go. My view is that Bitcoin, the real Bitcoin, is the thing that is not the passing fad. That's really here to stay. What I would say is, Bitcoin is the first time in human history that our money has been engineered. And this is an engineering audience, so you will know the difference between a hammer and a rock used to pound in a nail. It tends to be perfectly engineered to serve a purpose. And this is what the creator of Bitcoin, Satoshi Nakamoto, did in an extraordinarily ingenious way, in a way that many scientists before him had thought was impossible, a problem that couldn't be solved. And in engineering money, he engineered a kind of money that was for everybody on the internet, to everyone who's alive today and everyone who will ever live. This system is quite extraordinary in its capabilities. For one, it is entirely decentralized, which means that everybody can audit it completely and everybody can operate it completely, and nobody needs anybody's permission to use it. So everyone in the world can literally join and start using Bitcoin, and they can transact, whether their government allows them to or not, whether some boss of theirs wants them to or not. It's a very freedom-oriented system, and the engineering of the decentralization of this thing is what is the epic achievement from an engineering perspective. Built into it as well is scarcity, which is very important with money, and the ability to send it anywhere in the world and the ability to receive it for anybody in the world. So it's this extraordinary system which is entirely permissionless and trustless. Everyone can verify everything for themselves inside this system. And it frees us from all the things that have caused unengineered money to fail from. So salt has been money in the past, seashells have been money in the past, gold has been money in the past, and today, for the most part, we have what we call fiat money, government decreed money, which suffers from a number of limitations against what I said, right? Like, you can have your bank account frozen, so the government can say you're not allowed to use this money. The government can print unlimited sums of money. They can give it to themselves. They can give it to people who are politically connected. And so our money is not particularly good money. And every time in history that paper money has been tried, and this goes over thousands of years, or anytime someone has been in charge of issuing money, they have abused that privilege, and they have issued lots of that money, and that money has collapsed. And so what Bitcoin really represents is the first time in history that money is not controlled by a powerful regime. And it is designed perfectly to fit this. We don't have the time to go into all the engineering reasons why cryptography is essential to validate the proofs and to validate the amount of energy that goes into it, and why energy is in fact used in Bitcoin to keep the truth together there. But all of these things have come together to create, for the first time in human history, money that is reliable, scarce, divisible, sendable, receivable, censorship resistant, permissionless, trustless, all these interesting words, which I hope I'm not overwhelming the audience with. But this is such an extraordinary invention, and it's built to last for forever. Bitcoin, unlike most other systems that require consistent maintenance and upgrading, Bitcoin adjusts itself every couple of weeks to ensure that it maintains this steady pace of achievement. And the people in the Bitcoin community have been developing solutions to take it from the way it was released to continue to be able to scale up and to do things like sub-penny transactions, instant transactions, which weren't built into the base layer. But just like TCP/IP is 2 layers of internet, one which transmits and one which routes, Bitcoin is doing the same thing. So it has this very slow, very reliable, impenetrable base layer, and then it has a secondary layer, which we call the Lightning Network, which allows for all of the speedy transactions, instant transactions, which people are using quite frequently now. I don't know if I've hit my 5 minutes now, but I guess I'll turn it over.
You did. Thank you, Toma. I just finished off that poll. The final one is 28% passing fad and 72% game changer. I'm going to spin another poll up in a minute just to see how many folks on the webinar today actually have cryptocurrency. Alexandra, can I come to you? Passing fad or game changer? Should we be embracing cryptocurrency?
Thank you, Will. First of all, thank you for having me. It's always exciting to join a panel that by now I kind of feel that we will have diverse perspectives on the crypto assets. So to answer your question, to put it into this dichotomy, I think that I would rather be somewhere closer to 4. But my belief is that the technology will stay, the form will evolve. What do I mean by that is that I think that as Jimmy mentioned, a number of these cryptocurrencies, will refer to them as assets because they, from a legal perspective, they are not necessarily currencies, majority of them at least not. But to kind of, what I'm trying to say is that ultimately the crypto assets, they obviously need some form of a value proposition, and not many of them have. But the technology, the underlying technology, meaning the blockchain, that is really the powerful tool behind it, I think that is something that we will and already are embracing within the financial world and financial innovation. And just to give a little bit of the context for the audience and why I'm saying the things that I'm saying is that I'm a professor of law and I research subject on the corporate and capital market law. And currently I have a number of interdisciplinary projects with computer scientists and economists, because my question is also, what are the kind of macroeconomic concerns for the governments? Because I see, and I think that we all can see that more and more governments are coming to a point where they realize that they will need to enter the game of crypto assets, and they will need to develop the, so to speak, CBDCs, meaning the central bank digital currencies. And the entire world of decentralized finance, also shortly called DeFi, will just open. And I think this will be the new kind of or next big thing that will happen within the sphere of crypto assets. And I'm saying this to kind of, again, provide the kind of background why I'm saying the things that I am. And I want to maybe enter another element of this, that even though I am a big supporter of innovation and rethinking of how our financial system operates, and I think this is the underlying topic, why even the Bitcoin was introduced at the first place, is and how now we also see over the years that maybe this is a tool to address the issues of inequality and issues of sustainability. But I do think, and working with the ecosystem, that we need a little bit more also policy and regulation. And I'm not just saying this because I'm a lawyer and I enjoy those kind of things, but because over the years, the kind of what starts at cows and ends in cows. And I think that you can see a lot of crypto assets that have ended, and lots of investors who have ended in the chaos. But I do think that the healthy businesses and the healthy innovation thrives in a space of foreseeability, both policy and regulatory foreseeability, where the companies know where are the red kind of zones, what they need to comply with, and which enforcement agency they talk with. And I think that this is something that we also need to introduce in our discussions. And I hope that also the engineers who are joining and the entire audience who is joining understands that not only the potential economic or innovation kind of related potential of crypto assets, but also that we are in a movement where more and more countries are considering a major regulatory framework. And I call it framework because I do think it's within the parameters of a framework, to help kind of achieve the potential of the crypto assets and the underlying technology that is behind. Yes, and I'll just probably stay here and then we can continue from there.
Thanks, Alexandra. I'll just finish the poll and I'll share the results with you. So I did ask just to see how many folks out there own some cryptocurrency. So 40% of folks do, 47% of folks don't, and 13% don't currently, but they do plan on getting some soon. George, over to you. In terms of passing fad or game changer, should we be embracing cryptocurrencies, George?
Yeah, thank you. Well, I think I'll take the position of a passing fad. I am a financial therapist. I help people with their emotional relationship with money. I'm also a professor of managerial accounting and behavioral finance. So I understand kind of the emotional draw that cryptocurrency has when it deals with people. I would just highlight the real fundamental problem here, which is financial illiteracy. And financial illiteracy actually does not allow people to use all of the resources at their access, so that way they can compare what products they're using to actually achieve their goals. And so with any cryptocurrency holder, I would say, are we using cryptocurrency in comparison to a stock or in comparison to an EFT? Are we doing that so that way it allows you to better reach your goal, reach it quicker, have more confidence or more actual validity in achieving your goal? But if that's not the case, then what are you comparing it to? I think because of that lack of financial literacy, a lot of people make emotional decisions when it comes to their money, and it leads to searching for quick rewards, searching for those items that have a higher return. And so to me, it's not different. Even in my wealth management days, this is the same exact thing when we saw some of our aging population be in position to trade foreign currencies, to make money. It's not, to me, any different than in 2000s when the .com phase happened, and there was this inclination to, buy those stocks, even though some of us in the advisory community were talking about the inherent, lack of value in some of the technicals. And so there is this ability for people to gravitate towards it. I would only, stress this important point that because there is limited knowledge on financial concepts, and because people make emotions, it is an attractive marketing tool to use, be your own boss and do this and create, this millionaire. That is what is drawing people in. I think what is more concerning to me is that this feeling is approaching younger and younger people. People as young as 18 years old are starting to feel like I don't have this certainty that I will be able to afford my lifestyle or retire. And so we have younger and younger people stretching and reaching for this ability of making wealth without having much to compare it to. And I think if we're talking about how this relates to cash as a global form of currency, what we're not really doing is allowing a very prudent conversation to take place, as we do in this industry, between cash and other investments, cash and equities, cash and fixed investments, cash in foreign currencies. So that way we allow people to see that there is an actual choice there. If this were born by more of free choice or more actual choice, it would feel like it is something that's more sustainable. But instead, it feels like something that is marketed towards uncertainty, marketed towards that illiteracy, marketed towards the inability for people to grapple with affordability in certain locations, and therefore creates or necessitates this engagement. And so the technology is great. Of course, it's needed. Of course, we need to create better equality within the system, but it's always been a clearing problem, not necessarily a technology problem. We can send our money back and forth to financial institutions, but as within the stock market and in banking, when it has to clear, some of these other institutions, that adds time, adds cost, and takes money away from other people. So I agree with the blockchain elements of allowing some of the technology to make it easier to transfer some of this money without the time frame being as long as it is. But in terms of how it serves the investing population, and specifically how it serves newer generations of investors, I would only say when compared to other investments that are at your disposal, I would have to ask, what is it that is so attractive about cryptocurrency? How does it help you reach your goals, and what protections do you have that are better in cryptocurrencies than you do from Consumer Financial Protection Bureau, insurance, or against some of these companies going under, or at least the ability to have licensed professionals to keep you from going down those tracks? Where are the guardrails, and where is kind of the education that allows you to feel empowered, so that way this is something that continues with you? So I'll leave it there. I think kind of proved that I'm on the, this is a passing fad side, but I would love the conversation to continue further.
Thank you, George. And whilst you were speaking, I spun up another poll. This one was asking which of the following factors concerns you most about investing in cryptocurrencies. That they're not tied to fundamentals, a point that you made a moment ago, George. So 24% of folks are concerned by that. 29% are concerned by the volatility. 30% to Alexandra's point in terms of being unregulated. 9% in terms of anonymity, and 8% in terms of cryptocurrencies being environmentally unsustainable. It should be unsustainable rather than not sustainable. Yeah, I'm reading it wrong. So Patrick, over to you. Passing fad or game changer? Should we be embracing cryptocurrencies?
Both. It's both. How's that for a lawyer answer?
Very succinct.
Right? It's almost as bad as it depends. So I think it's quite obviously a game changer. I mean, and I'm happy to walk through why that is. And I think it's also been quite obviously over time a passing fad repeatedly. Right? We've seen multiple boom bust cycles throughout, and we've seen like the altcoin boom in 2017. We saw sort of a big ramp up in 2013 that crashed in 2014. And we just recently have come out of another boom cycle with the DeFi summer last year. I think the questions that George suggested that everybody ask themselves are exactly the right types of questions you should be asking. I might come to a different answer in terms of whether I'm willing to invest or not invest, but I think the questions are absolutely correct, and that's exactly how everybody should be thinking about these markets if they want to enter, or the products that they want to use, or any of those things, or however you're thinking about the space. You should be asking those questions and making sure that you're comfortable making these choices and making the investments. And to the extent you're getting into a higher risk market, that you're not, over leveraging yourself or putting in more than you can afford to lose. I mean, hey, everybody should have a little bit of a casino budget, George. Come on, right? Like just a something, right? To have fun, a lottery budget. He's the pro. He can tell you how much that should be, not me. So it's been a little bit of both, in my opinion, and we've seen a little bit of both. That doesn't bother me that much. When you think about the internet and really the rise of any technologies, it comes in waves. It comes in waves of excitement, and we just had a very recent wave of excitement, and along with those waves comes a lot of really interesting technology, right? And development and infrastructure development. And oftentimes there's overdevelopment, right? Because it's a boom cycle. But what was overdevelopment, 5 years ago is sort of necessary infrastructure eventually. And that's exactly what we saw with the internet. Think about Global Crossing or any of these big, companies that were, wiring, transatlantic cables and fiber optic cables all over the place. And then they all went dark in the early 2000s. They were worthless. They were worthless projects, right? Not to Google, who bought up a lot of it, right? And now they have a huge fiber network that's crucial to their business, and it's crucial to the operation, the backbone of the internet today. But absent the speculative bubble of the early .com era, there wouldn't have been the capital to actually deploy all that infrastructure that we now take for granted. So these speculative bubbles, you got to be careful. You should follow George's advice if you're an individual investor and this is what's going on around you. But at the same time, the infrastructure that's built in those bubbles can become very, very important, and we can come to rely on it in the future. And I expect that's what will happen here. So when you think about it, it's interesting that for the white paper mentioned a couple of times, I had a different experience with it than I think most people, or at least what most people are willing to admit. When I first read it, I was in a digital currency startup, and this is when it was Slashdotted back in 2010. Early 2010, and one of the engineers at that company brought it to my attention because we were building digital currencies for online communities and virtual economies for online communities, something that is basically everybody talks about now. We were doing it in a centralized model because that was the spirit of the day. Brought it to my attention. I read it. I made a joke to our CEO that somebody had open sourced our business model, and I thought it was stupid. And I thought it was stupid. I thought it was stupid at the time because I looked at it and it was like, okay, great, nerds reinvented money. Like, who cares, right? There was so much focus on sort of payments, and I was working in that space, and I knew that space really well. And I was like, yeah, it's not going to work, right? That's a dumb idea. It wasn't until you fast forward a few months and I dug back into it, and then the light bulb went off for me that this isn't about payments and it's not about money per se. It's about property, and it's about the relationship between people, property, and power, right? And that is really interesting. And then I came back and circled back to the white paper, and it's like, it's genius. I mean, it's a little bit of a red herring, right? But now I get it. When you look at what happened there, what was created was, for the first time, you have digital artifacts that you can actually possess and own in a way you could never do it before. And we've seen time and time again why this is problematic, that we don't have this and it's not more widespread today. And so as an example, for those of you who have Kindles and, I'm sure, or have shopped at Amazon in any way, but particularly those who have Kindles, I have a Kindle, I download books. It's, a nice convenient way to read and everything like that. Maybe ironically, if you were in the UK and you had bought a copy of 1984, George Orwell's 1984, you have that on your Kindle and you're reading it one day, and then the next day it's disappeared because there was like a copyright issue. And so Amazon, from its central servers, removed that book from everybody's Kindles in the UK. Now, if you had bought that book, I bet you thought you had bought a book, that you owned something, that you had purchased something real, tangible, that was property, that was yours. But you hadn't, right? You had just acquired a license from Amazon to use it at their pleasure. And when they no longer had the right to deliver it to you, you no longer had the right to use it because you didn't actually own anything. That is the world we all live in still. And that is fundamentally what the innovation that happened along with Bitcoin changed. So when you look at these things, and George, when I analyze sort of the different opportunities in the space, and I think about utility, or as Jimmy said, what's the utility here? And I think that's another good question. Like, what is the actual utility of these things that I'm going to invest in or put my money in or get behind or just put my energy into as a creator, right? What's the utility, right? What is it that it's actually delivering here? And for some of these systems, there isn't really any. It's all just, a facade. It's a show. It's, decentralization theater, right? But for some, it's real, right? Bitcoin being one of them, but it's not the only one, right? I think Ethereum has proven itself out, even though it has some centralized issues. and they all have sort of issues, but there are a lot of them that are out there. And you look at it and you say, okay, well, is this something that is where any one party can actually remove me from the system, can take from me the way Amazon can take 1984 off my Kindle, can take whatever this token, this thing of value that I have is, can it be taken from me, right? And if the answer is no, then that's valuable, right? I mean, it's proven throughout eons of history. Like that is a thing that is valuable to people. Like having something, owning something, having it be yours, and you being in control of something, some artifact, some thing, right? Some piece of property. So I'll leave it at that. I would say in terms of again, passing fad or game changer, and Alexandra alluded to this, and it's really important too. First of all, it'd be a really long passing fad. I mean, it's like you could have gone to college, law school, gone to a law firm, paid off your student debt, and it'd still be a fad that's going on apparently, which I don't think that's a fad anymore. I'm sorry, like it's been too long. Alexandra pointed to something else that's very important when we think about that question. And that is that in the halls of power, whether it's the president issuing an executive order, or over in the EU, around the world, there is now a notice has been taken of this shift that's happened, a cultural shift, right? Where people are now open to re-examining what property is, what money is, and what it should be for them. And we know money is a governance project, it's a constitutional project, right? It has been in the modern era, since the Bank of England, right? And so as a social construct and as a social project, right, the door is now kicked wide open to what money should be, what it should look like, who it should serve, and sort of what the contours of that are. And that, to me, sounds like a game changer, whether Bitcoin is the thing or something else is the thing. The conversation wouldn't be happening if it weren't for Bitcoin.
Alrighty. Thank you, Patrick. I don't know whether it's Amazon bugging you or whether it's Big Brother interfering, but your microphone is buzzing a little bit when you speak. But we could hear you fine, so I didn't want to stop you.
Yeah, that's the problem. You poke the bear, and
yeah.
you don't know.
Thanks, Patrick. Alrighty. There are questions appearing in the Q&A, and I would encourage the panelists, if you see a question in the Q&A, if you want to type an answer in there as well, please feel free. We've also got a few other questions that I'll pitch, and the first question, and I'll start with you, Alexandra, on this one. Christine Lagarde, who is president of the ECB. At the time, she was head of the IMF when she said this. She stated recently that regulatory action from the international community on cryptocurrencies is inevitable. So how far do you agree or disagree with this? To what extent, Alexandra, do you think that regulation is inevitable? And when we look back at the poll that we had, the largest number of people, 30%, did have as a concern the fact that cryptocurrencies are unregulated. Alexandra.
So I think, Will, that the ball is already rolling. If you look at whether it's again President Biden's executive order, or here in the EU, we already are very close to passing the first regulation on crypto assets. So that's one of the things. And if you also observe, I actually checked last week, or it was actually at the beginning of this week, the European Central Bank issued a legal tender, or opened a legal tender for the technology to assist them to build the digital euro. And of course, these are two different segments, because the digital euro will be still within the premises of the European Commission and the powers of the national states or the member states of the European Union, whereas still the crypto assets and whether they will be, whatever form they will be regulated. And the fact that the European Union, and this is maybe a little bit too much law, but the fact that the Commission decided that the format of this act is regulation, which is the higher level of a kind of a really binding legal act where the member states do not have much to adjust. So as it is, it will be applicable all over the 27 member states of the European Union. Speaks, I think, volumes, and everyone is getting ready. All of the enforcement agencies, whether it's Denmark, whether it's France, whether Germany, BaFin, even Swiss, which is outside of the EU but within the financial kind of community, they're getting ready for the regulation. So I don't think that it's already happening, and I think that we will see this going on all over the world. It's just that this is also one of the strategies of a couple of governments, that they wait and see whether this is the right form of regulation or what kind of changes they need to kind of adopt or address. And then over the next 2-3 years, everywhere there will be regulation. You're muted, Will.
Thanks, Alexandra. Jimmy, same question to you. Is regulation inevitable?
Certainly, but we have to, I think, clarify what type of regulation we're talking about. Just like when the internet arose and any new technology, initially governments don't try to pass new legislation or regulation. They try to apply existing laws to new technology. And that's what we've seen across jurisdictions, where it's not like governments are racing to enact new laws just because. That's starting to happen, but the types of things that are going to be addressed legally are questions such as whether the companies that are involved in the sending, the transfer, receipt of digital currencies, whether they need, for example, to be licensed as money transmitters in the United States or the e-money license equivalent in the European Union. Questions such as whether, if you're operating a cryptocurrency exchange, whether that needs a separate type of license than, for example, than you would have if you were, for example, a securities exchange, and which, for example, in the United States, which agency should regulate that. We're seeing also questions about whether or not companies that are the service providers for virtual assets have to comply with KYC, AML compliance requirements, or the FATF Financial Asset Task Force travel rule and other similar policies in order to collect more information and exchange information about the senders and receivers of digital assets like we do in the traditional banking world. All those things are coming. I do think those things are inevitable. We're also seeing, for example, questions about whether securities laws should be applied to digital assets, but that shouldn't be shocking. The SEC is looking into that for NFTs, for example, as recently announced. And I don't think this is shocking, and a lot of it's not even new regulation. It's taking existing legal concepts and evaluating how they apply to this world of digital assets. There will be some new pieces of legislation in different jurisdictions. I'm involved in advising a lot of governments around the world about what policies they should take into place. I'm a big proponent of responsible law and policy, because my goal, and a lot of the people I think on this webinar's goal, is to see digital currency and assets used at much bigger scale. For that to happen, I think we need to get governments and big businesses and institutional investors, as well as the everyday consumer, comfortable with the use of digital currency, no matter which it is, whether it's BTC, Bitcoin, or BSV. That requires the everyday person, as well as people in governments, comfortable with the safety and the ability to crack down on criminal activity, and to feel that people are confident in investing money into these assets, and that there won't be, scams that they become victims of. So this is where we're, I think, very different than a lot of the early Bitcoin and crypto supporters, who I would say are more crypto anarchists, crypto libertarian, who didn't want, government oversight of digital assets. I'm a big believer in responsible oversight. I don't want over-regulation, but I know that for this to be adopted and used at massive scale around the world and not just become the land of crypto hobbyists, that we need regulation enough to make people feel comfortable with the use of digital currencies.
Alrighty, thanks, Jimmy. I want to shift the debate just a little bit, and Tomer, I'll bring you in on this one to consider the idea of risk and security risk. Again, it's one of the things that kind of came out of the poll that we just did. If we look back to 2014, we had the Mt. Gox security breach that saw millions of dollars in Bitcoin stolen from the Japanese exchange. And we've got a question here from Philip Lilleveld. Sorry, I probably mangled your last name. Apologies. When a bad actor hacks the cryptographic protections of cryptocurrencies using quantum computing sometime in the next 5 to 10 years, Philip seems to have the inside track on this. What's to keep the value of the currencies from collapsing? Toma.
Well, there's a mistaken premise in the question, right? It's like when aliens come down and enslave us all and eat us as food, what's to stop us from being eaten as food? And it is this presumption that there's this invention around the corner that's going to break the laws of math and physics is simply a mistaken presumption. Bitcoin is built with military grade encryption to protect it. There's lots of interesting videos on the internet that show you just how vastly large these numbers are and what it would take to crack the 256-bit security that is embedded throughout every layer of Bitcoin. We're very, 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 very far away as a civilization from being able to break that. It's not even clear if any level of quantum computing exists, let alone the kind that would need to exist to break this. And there are various levels of security. In fact, the creator of Bitcoin, Satoshi Nakamoto, is estimated to have is a mysterious person. Nobody knows who they really are. They use this mysterious name and they disappeared after they created it. And they initially found some significant portion of the first couple of million Bitcoins, and they have left them untouched in a lower security holding than today's coins are held. So if someone was to develop a quantum computer that could crack what's called elliptic curve cryptography, which is the first base layer, which these are protected, there's a million Bitcoin gift for them for taking this on the blockchain, and while everybody else will then have an opportunity to increase potentially the security of the coins that they hold. So like I'm not very concerned. I'm not concerned about this at all. It's what we call FUD, fear, uncertainty, and doubt, which is if you understand the mathematics, if you understand the physics behind what it takes to crack high entropy cryptography, you'll realize that we're nowhere near anything that would approach cracking the security of Bitcoin.
Alrighty. Patrick, same question to you. Should we, Toma has suggested that these exchanges are very secure. Should we be worried about the security of
Hold on. So I did not say the exchanges were secure. I said Bitcoin was secure. The exchange, we have a saying in Bitcoin, which is get your coins off the exchange, not your keys, not your coin. So I the whole point of this is that you can own digital property. And if you let someone else own your digital property, you don't own your digital property. So it's very important to take self-custody with any of these things. And it's why Bitcoin is so strict, and the Bitcoin community is so strict about ensuring that self-custody is possible, ensuring that self-validation is possible, ensuring that everyone can run a full node with the entire blockchain for themselves to know that they own their property. So sorry to jump back in.
No, thanks for the clarification. So Patrick, over to you. So with these exchanges vulnerable to hackers, malware, operational glitches, how worried should we be worried? How much should we be worried about this security risk?
So when the aliens come down and turn us into Soylent, how worried am I about the Bitcoin? And I agree with Tomer. That's not like first order of like concern for me, right? In fact, if and it's I agree with everything you said, Tomer, is spot on. But if there was some invention, some leap, and you could break, the 256 encryption, then I don't think we'd be worried about Bitcoin. I think we'd be worried about our banks, our military hardware. We'd be worried about everything because everything else is going to break too, right? It's not like cryptocurrencies over on the side in some special case. It'll be easier to manage the Bitcoin because presumably we'll snapshot the blockchain, upgrade the crypto, and then like roll it back out. So that's like not really concerned about Bitcoin. Other chains have different security parameters. They're not all the same. This comes back to what I was talking about, what George mentioned earlier too, and what Jimmy mentioned about the inherent value, right? it gets right at the inherent value of these things and what you should be looking for as a user or investor or anybody who's involved in these projects. Like, you know, how secure are the different chains? Because I think, as I said, Tomer is spot on with Bitcoin and, you know, not your keys, not your coins, the whole thing. But that doesn't mean that every chain has equal sort of protection, right? Or equal security characteristics. In fact, some certainly do not. And we have seen that play out time and time again. So when you're thinking about, well, what's there between this chain and that chain and another chain? It's like, well, you know, what are the characteristics of them? How seriously do they take these issues, right? There's an incident with the IOTA community where researchers actually found a bug, found a flaw in their algorithm. A good friend of mine was one of those researchers who found that and responsibly disclosed it and then got attacked by their community for doing it. It tells you a lot about the community around IOTA, right? And how they think about security. So it gets right to those initial questions we talked about. What's the inherent value? What's the thing? As far as exchanges, I've seen them again. I've seen all the way back to Bitcoinica. Like I can go back in terms of all the exchanges that have been hacked that you know, we've seen along the way. And it's exactly what Tomer said: not your keys, not your coins. If you're relying on somebody else to do that work for you, then you're back into the world of Amazon and Kindle, right? And not really owning your book. You know, you have a right to receive coins from, say, you know, Coinbase or whatever exchange you're using, but you don't have the property itself. So you're taking that risk. You're taking on that counterparty risk. That's a choice you can make. But unlike other systems, it is your choice. You can choose to take on that counterparty risk, or you can choose to mitigate it, either fully by taking all of your assets off exchange, or partially by taking some off the exchange. It's in your control. And you don't have that option with securities or, you know, with your cash in the bank or any of those other things, other than going to the ATM and pulling a bunch of cash out and putting it under your mattress, which good luck nowadays pulling that off, by the way. As far as your previous question about regulation, I'd point out that cryptocurrencies are already heavily regulated. It's not like regulation is coming. Regulation is here. It's been here. It was here long before cryptocurrency even existed. When you think about securities regulation in particular, it's a principles-based system. That means, in the US, I should say, I'm a US lawyer, I've talked to all those other countries, but it's very different code-based stuff. In the US, it's principles-based. So if you issue a form of property, an asset, it's cryptocurrency, whether it's paper airplanes, doesn't really matter. There's a test that's technology neutral that says, you know, is this a security? Is this offering? Is this scheme a security? Is it not? Right? It goes all the way back to selling plots in an orange grove. It's the so-called Howey test. Mr. Howey selling those orange grove plots, right? And the question is, like, is the sale of those plots a security sale, or is it just a sale of real estate? And you have to run that test no matter what asset you issue. And we've seen it time and time again. I've been involved in the resolution of many of these disputes with the SEC, where you know, you'll have somebody who issues an asset and they think that it's, you know, a commodity or some other form of property. The SEC takes a different view. It says that offering was a security. There was an investment contract between you and the buyer, and therefore it's a regulated instrument. And that hasn't changed. Pre-existing cryptocurrency, that test will be here long after we're gone in some form or another. The exchanges who list and sell securities need to be either broker-dealer ATS, alternative trading systems, or they need to be national securities exchanges, full stop. There's no sort of like cryptocurrency exception. There's no regulatory arbitrage. If you're selling things that are securities, you have to be regulated. That's it. We're already regulated. If you're selling commodities, if you're selling something in the US that's not a security, you're already regulated. In fact, you're more regulated than you probably guessed, because if you're selling commodities, you're potentially regulated by the CFTC, depending on what types of sales you're doing, what the contracts are underlying those assets. If you're not, you're regulated by almost all 50 states and some territories as well. about 48 states and a couple territories as a money transmitter, which means that you have to have insurance, you have to have bonds, you have to put all sorts of controls in place. You have to have state auditors come to your office, review your books, review everything that you're doing. So if you're running a cryptocurrency exchange right now, you have something like potentially 60 regulators, right, in the US alone. So that is not an unregulated space. That is a heavily regulated space, just to be clear. And there's a whole bunch of other stuff too.
Thanks, Patrick. I think we gave some good coverage to the regulation side of things. I'd like to take a look now at market risk, and I've just republished that poll again in terms of some of the concerns that folks have about cryptocurrencies. Second largest concern is volatility. George, if I can come to you on this one, the global market is valued. I think I looked the other day, 1.74 trillion. It's enormous. Any market is subject to fluctuations. I think there could be wild swings, though, in terms of cryptocurrencies in response to headlines, in terms of actions of actors in the market. And we'll talk about Elon Musk in a moment. George, is cryptocurrency just too risky?
Yeah, I think it's too risky, and I'll just highlight some of the comments, and I'll just take it from a behavioral sciences perspective. And I will just say this relationship between money is very different than our traditional view of economics. Are aliens going to come down and do anything? No, but unless you've managed people's money, that's a question that they would obviously ask, right? That this ability to kind of think of the most astronomical thing and say, oh, it's impossible. Manage somebody's money. Manage as little as $50, and you will hear some of the more interesting things when it comes to what are some of the risk here, which is very different than managing someone's $10 million portfolio. So the notion that we can just dismiss it, right? Dismiss it as, oh, we're not doing X or we're not doing Y because that won't happen. I say good luck. Right? Good luck from an engagement standpoint, because if I've sold stocks and mutual funds and bonds, if I'm getting questions that just seem out of reach to me, how do you think these questions in cryptocurrencies are going to go? The fact that there are questions that people don't even know how to formulate the answers or formulate the questions to are the other part of the risk. If it is a regulated industry, I think why so many people think it's unregulated is because some of the people don't know how the product works, how to actually articulate how they've been taken advantage of, understand the technology behind it so they can understand what their involvement is, what's versus somebody else's, and actually formulate that into some type of coherent argument for why you should seek some type of judgment in your favor. It then requires that the people on the opposite side understand all of that as well, and have the ability to actually have context to this individual so that way it's able to be solved. So I think that there is a huge part that, again, fails to acknowledge our underlying problem, which is the lack of financial literacy in our country and around the globe. This is not a problem, but the problem happens when we try to take a widely financially illiterate society and force them to be investors at every single turn. That is the problem. It was the problem in the 80s. It's the problem in the 90s and the 2000s. And it's becoming the problem now. Like, it is okay if people want to engage in this and at your own risk, but that's not how it's being marketed. That's not how it is being received. In the same way, we are infusing our very equity market with a lot of people that shouldn't be there, hoping that they get it, and then having them compete with professionals doing the same thing in the crypto market has the same exact type of outcome. So this is not new, right? We fight against this all the time. This influx of people as investors who are not prepared to be investors, that's a risk. Having that many people unaware of how their products are designed and how to articulate what may be wrong, that is also a risk. Having the inability for that conversation to be communicated up and down regulation and understood, that is also a risk. So there seems to be multiple levels of risk associated with it. And it would honestly never fit into the paradigms of the tech specs, the technology specs, or in the traditional economic sense. But it is a pinpoint on the behavioral sciences part and how this impacts people in their emotional relationship to both risk, uncertainty, fear, and just really not having an affordable lifestyle right now, that creates so many different issues that the risk seems to be far more than the value for whatever the digital currency is.
Thanks, George.
Hey, Will, could I respond to that briefly?
Jimmy, can I just go to Alexandra because she had her hand up?
Yes.
Did you want to speak to this particular point from George?
Yes, thanks. And thank you, George. I think you raised many so important, very important questions. And I think that, you know, speaking about the lack of financial literacy, I think it's everywhere. And if US is considered that there is a challenge, then, you know, let's look around the world where I think that, you know, the level of financial literacy, even in Europe, is extremely low. But I don't think that these two are necessarily connected to, or that the lack of financial literacy is that much of connected to the crypto assets themselves. And I fully, again, agree with you that there is this entire concern of what is the value behind it and all of the issues that we already raised. But I think that with these comparisons, and Jimmy also compared it to the internet, and here I think that going to kind of a financial regulation, we can go back to the beginning of the 20th century in the US, where we had, or you had, guys, the blue sky laws when it came to securities regulations, because people were selling the parts of blue sky, and this is a phenomenon that comes and goes, and, you know, people are recreating and the same way that they had before. So I think that, yes, undoubtedly financial literacy is one of the major issues, but I'm not, I would argue that it's connected to all of the tools that are out there, one way or another. Thanks.
All right, thanks, Alexandra. Jimmy, do you want to come back on this point? But Jimmy, can I also ask you if we could start going through some of the questions that have been asked? Once you've answered that, can you speak to the issue of how the conflict in the Ukraine might impact Bitcoin, given everything that's unfolded, and this idea of Bitcoin as digital gold, for example? Yeah. So if you want to come back first and then answer that one.
Sure. My reaction is that I understand why the everyday person is concerned about the volatility of digital currency prices. They are, in fact, too volatile. When my friends ask me, what happened to the BTC price today? What happened to the Dogecoin price today? There's not really a good answer. And I think that what we're trying to do is create a good answer to the value of digital currencies by providing utility, right? And that should be rooted in what I view as data, the most valuable commodity of our digital era. If you can create a system that uses the blockchain's data at massive scale to record payments, record and use other forms of valuable data, then you have a more legitimate basis for the price of a digital currency. But that's why people are afraid of the volatility. So I totally understand the question, and I would go back to the original purpose of Bitcoin was, in my mind, not to be an investment. We've all been talking today about whether or not people should invest in cryptocurrency. But I want people to step back and go, well, was it supposed to be an investment in the first place? Or was it supposed to be a tool for us to be able to send monetary value more efficiently across the internet? I think it's become viewed as an investment, and that's why it has these huge volatility spikes. But that's not really what it was supposed to be. There's no problem with making money off of the wild swings, but that's why people, I think, are afraid. To your question about whether or not Bitcoin is supposed to be digital gold, in my view, and in some other people's view, that is a after-the-fact narrative that was created by some of the Bitcoin community to justify why Bitcoin didn't scale. And it's not really a good reserve asset. It's not really a good store of value if it has 10, 20, 15% price drops. The situation in Ukraine has people asking, in fact, I did a New York Times interview about this the other day, well, shouldn't the price of BTC and Bitcoin be going up because now in today's world conditions with the Ukraine conflict, people should be moving their money into something like Bitcoin and digital currency? And we're not seeing that. for a lot of the last week or two, we've been seeing the price drop. I mean, it goes up and down on various days. But that's because I don't think Bitcoin was meant to be a reserve asset, a digital gold. It was meant to be, in its very title, a peer-to-peer electronic cash system, meaning a system to be used daily, electronic cash to send payments between each other. So I refute the notion that it was meant to be digital gold. If that's what it was meant to be in such a situation as a world conflict like we have today, it doesn't do a good job of that, because otherwise no one can explain why the price goes up 10, 20, 30% one day and then drops another day. That is, it's not something that breeds confidence among the ordinary person. It's not what I think Bitcoin or any digital currency should strive for. If we want this to be used at a mass scale, you need some stability and explanation behind the price. And to me, that comes from utility, utility, utility. That's what we're trying to create with our version of Bitcoin BSV.
Thanks, Jimmy. Tomer, I'm just going to come to you. Just to say, I've just spun up another poll asking if Elon Musk, does he have too much power over the price of cryptocurrency? But Tomer, you wanted to come in on this point. You're muted.
I wanted to come in maybe a little bit on both of the previous points. I think George made some really excellent points about the fact that people don't have financial literacy, they don't have financial education, and they find themselves forced into becoming investors. And the reason for this is the flaw with our current monetary system. It's the fact that money is not a reliable store of value. Inflation destroys our ability to save for the future, and interest rates are nil, so you cannot save for the future. If you put money aside, it'll be worthless 10 years from now. This is part of the problem of what Bitcoin aims to fix, and so I respectfully disagree with Jimmy on this. Bitcoin, in having a strictly limited supply, one that cannot be inflated by third parties, by governments and other powerful individuals, is what creates this tremendous store of value interest in this asset. The fact that it can't be seized, the fact that it can't be inflated, is what is actually causing a lot of people. Like if you go into the Bitcoin community, you will see that financial literacy is one of the core activities, one of the core education activities of what takes place. And people are reading books on economics, they're studying Austrian economics, they're studying monetary theory, they're studying the history of empires and why they collapse. And all of this is because they want to learn about economics, they want to learn about money, they want to learn about finance. And Bitcoin being engineered to react to the vulnerabilities that money has turns out to be something that a lot of people find to be the solution to these problems. I personally find it terribly distressing to have to invest in stocks with all this wild swings and volatilities and just this insecurity that I have from a financial advisor who doesn't seem to know a whole lot more than I do. And I end up feeling a tremendous amount of comfort saying, I know when I invest in Bitcoin exactly what I'm investing in. And it doesn't feel like an investment. To me, it's about savings. It's about stability. And this will just very quickly talk about the volatility point. To me, Bitcoin is incredibly stable. It made a promise that it will issue a certain number of coins up to a limit over a certain period of time. It has kept that promise flawlessly. It has said anyone will be able to spend their coins without restriction. It has kept that promise flawlessly. It has said your coins cannot be seized or taken from you. It has kept that promise flawlessly. So every promise that Bitcoin has made, it has actually kept flawlessly. It's incredibly stable. And I think what we're seeing, this migration towards Bitcoin, is a migration on its path towards economic stability, where there aren't bureaucrats who can create economic disruption and economic crisis because they borrowed money that they can't pay back. And so now they're going to print a whole bunch of it for nothing to make it look like they can pay it back. But in fact, they just keep raising debt ceilings. So it's like Bitcoin is stable. We know a lot about it. The current financial system is, I don't want to swear, but it's a gong show in terms of what's going to happen. Like in the next 20 minutes, some bureaucrat's going to come up. This is, in fact, and he's going to say whether or not interest rates are being raised by him and his committee alone, and that's going to drive prices of all sorts of assets into all kinds of volatility. And why does he need to do this? Because of the problem that he created before when he inflated the money supply and lowered the interest rates for 20 years. So we now have a system that opts out of some appointed bureaucrat decides what our future savings is and forces us into investing in wildly speculative stocks like Elon Musk's Tesla. So I was trying to answer 16 questions at once. I'll stop there. But Bitcoin is the exit from the madness of a system that none of us can really figure out what's going on in it.
Thanks, Toma. And talking of Elon Musk, as you did, so the survey we got from all the attendees, they're saying that they think 57% think he has too much influence on the price of cryptocurrency. Patrick, did you want to come in on that one? But also, I'd like to also address Anthony Lysenko's point. He's asking about crypto's negative impact on the environment. Would you like to come in on those points, Patrick?
Sure. I mean, I think that Elon maybe has too much power over the Dogecoin, right? But I'm not sure about the other ones so much. You know, it is what it is. So, but it ties into the second question, right? We talk about crypto as if it was a monolithic thing, right? As if there were like issuers who had schemes, who had marketing materials. For some of them, they do, but you know, we talked about how that could be, you know, maybe less attractive. One of the things about Bitcoin that makes it special, even within the cryptocurrency world, and makes it different, sets it apart, and makes it special, is that it was the first one. And so what that means is when Bitcoin was created and launched and set loose upon the world, nobody thought it was going to be worth anything at all. For a long time, nobody thought it was going to be worth anything. And it was just sort of like at best a novelty. And so the community sort of that grew around it just has a different set of values. There isn't, aside from Satoshi, who wisely disappeared from the scene, there isn't anyone who was around at the beginning who took a huge stake early, like you would in a startup or something like that. The people who have huge stakes were the ones who were there early and contributed early. And so it has just a very different ethos from everything else in the scene. Everything else, when it was launched, people knew that it would be worth something, and that motivated a certain type of thinking right from the beginning. So that's not, when we say crypto, and I'm not trying to say, oh, there's Bitcoin up here and everything else is over there. They all have interesting characteristics, but Bitcoin is special in its own way. And crypto is not like a monolith. It's not one thing. So when you say environmental concerns, there are some cryptocurrencies out there that have a bigger footprint than others. And it's really a normative, like, values question, right? When you're saying everything costs something, nothing is free. Proof of stake, proof of space time, like all these, proof of work, there are all these different ways of forming consensus, effectively who has access to write and edit the database. And, you know, the ones that have the sort of highest security guarantees are the ones that are based on proof of work, full stop. If you want the most secure chain with then you're going to use a proof of work chain. All the other systems are compromised in other ways. Proof of stake, sure, it's an oligopoly, right? It's an oligopoly of the founders of the chain who basically control who gets to read and write and edit the database. Proof of work does it in a different way. It's very unique and it's a special system, but it has an environmental cost. There's no doubt. I mean, it costs something to gain those security benefits. Nothing is free. Proof of space costs something too, right? You have to manufacture a bunch of hard drives and spin them up and run them in data centers. The question, and why I say it's normative, is it worth it? And, you know, that's just what do you value? What do you value as an individual? What do you value as a society? Now, I think that the sort of ESG concerns around proof of work mining in general are vastly overblown, right? And they tend to assume that the apples to apples comparison is proof of work mining versus nothing, which isn't true, right? In a centralized setting, you're still spending to have those same security guarantees, right? JP Morgan that doesn't come free. They have buildings all over the country. They have lots of people who work there, many layers of controls. They have data centers that they run. YouTube does not come free. Netflix does not come free. Those data centers burn up a ton of fossil fuel energy, right? This webinar that we're hosting right now does not come free, right? We just value it. And we're willing to burn some carbon so that you can see my office and my cat hat and all the other things around here, right? So it's a value question. In, you know, do we value proof of work and the security it provides for these different types of systems and blockchains? And, you know, ultimately that's a market question. Are you willing to pay for it? People are willing to pay for it, and it's economically viable. So in some ways the question answers itself.
All right, thanks, Patrick. Let's
and sorry, I want to add just one thing, because just in case I sounded like too much of a capitalist there. I also point out that, you know, there are a lot of fossil fuel energy providers that are using Bitcoin and other cryptocurrencies and proof of work mining as a way of sort of hedging against peak hours and things like that. So this is when I say that the conversation is really sort of misleading and the concerns are overblown. Bitcoin proof of work mining actually has quite a number of benefits for fossil fuel alternative energy systems, and it's actually happening. It's not speculative. It's happening. You just don't hear about it. So.
Alrighty, thanks, Patrick. Alexandra, can I come to you? I'd like to think about cryptocurrencies and businesses. You know, if you know, increasing number of companies, they're using them for investment, for transactions, and operational purposes. You know, there are benefits and there are risks. So to what, when a business is considering whether to use cryptocurrency, what should they be thinking about?
I think that as long as they are not Elon Musk, they should just drop it. And by the way, to all of you who, you know, I still wonder how is it possible that Elon Musk is, you know, is not behind bars for all of the manipulation with the market. But, you know, that's from my perspective. To be honest, Will, I have not as much kind of come across the companies that would do this, at least not here in Denmark or those companies that I work with, that they would see it as an investment. They undoubtedly felt several years back the push to introduce some form of a payment possibility to have a crypto as a mechanism for payment mechanism, but not necessarily as an investment. At least that's my personal perspective. But maybe someone else from the panel has a different experience.
Yeah, well, could I address that?
Yeah.
I think the question is born out of the trend that started in the last year and a half, when some public companies in the United States, such as MicroStrategy, led by Michael Saylor, Square, the Twitter associated company with Jack Dorsey, and other, as well as Elon Musk and Tesla, started announcing they were buying up large troves of BTC with the express purpose of not using it, instead putting it into their reserves as a treasury management tool. And that started pushing up the price of the BTC version of Bitcoin dramatically. And so that led them, Michael Saylor's even run seminars to try and educate other public companies as to why they should be holding Bitcoin on their balance sheet. My view of that is it demonstrates the whole problem with the cryptocurrency markets. The price of BTC was being driven up by companies saying we're going to buy up large amounts, specifically not to use it, and instead to just hold it as a reserve asset and treasury management tool. And long-term, that's not sustainable, because you're having an asset that's supposed to be an electronic cash system used for daily payments, having a price being driven up by big holders saying, let's buy up large amounts, and then not using it. And then everyone else in the common markets come in, the everyday investor starts coming and saying, oh, I got to get some, as to avoid FOMO. I think that was a real problem. It did lead to other companies saying, maybe I should buy some BTC or other digital assets to use as a treasury management tool. Well, there's nothing inherently wrong with that, but it's not what this entire industry was created to be. And I think that is the problem. I think companies should be looking at whether they want to use blockchain technology and digital currencies for payments and other business uses that have real utility, not just to buy it and park it and hope that the value goes up.
Thanks, Jimmy. Toma? You're muted.
Just to maybe make this a little bit spicy, Jimmy is complaining that people aren't using Bitcoin the way he wishes it was being used, and so he wants to invent something different for a different purpose, and he's welcome to invent something different. But Bitcoin is being used the way the free market is deciding to use it, which is as a store of value, as a unit of account, as a medium of exchange. All of these things. If some people want to choose to hold it to save for the future, I mean, this is why these corporations have bought it, because they say, if we're sitting on cash, then our cash is dwindling in what it can buy. There's tremendous inflation in the stock market of companies we wish to acquire later, or assets, so our reserves, our profits are leaking. If we use it to buy back our shares, which is what many other companies are doing, we're stripping ourselves of capital. We're just retiring shares and depleting our balance sheet. So what can we hold on our balance sheets that's safe? And they're actually saying, oh, Bitcoin serves as a store of value. Other people in other parts of the world see Bitcoin as an escape from a highly inflationary currency that they do spend. And so Bitcoin's like, it's good money. So it solves all the things you want to do with money, saving and spending. And if Jimmy, I'm trying to make this an interesting debate here. If Jimmy doesn't like the fact that people save money, it's not up to him to tell them that they can't save their Bitcoin. People can do exactly what they want to do with their Bitcoin. They can spend it to whoever they want. They can hold it for however long they want. And they know they have the assurances that it can't be seized and that it can't be inflated. And so that's why narratives like digital gold make sense, and narratives like digital currency make sense, all for Bitcoin.
Thanks, Toma. Patrick, I'm going to come to you, and then George. Can I ask you just for a brief response, because then we're coming into the last 5 minutes, and I want to get everybody's take on perhaps what's coming next. Patrick.
Yeah, absolutely. And Tomer, you're just stealing my thunder every time, man. Just when I'm about to say something, you just jump right. All right. So rather than just saying +1, I'll say a little bit more, right? Like, a lot of people are talking about what it should be or what it shouldn't be. I don't have any idea what this stuff should be. I'm just going to put it right out there. I have no idea, right? It's like, it's open source stuff, man. It's like, it could be anything. And that's the beauty of it, right? And anybody who wants, it's Linux has multiple distributions, Debian, Ubuntu, whatever. Like, and Linux, when it started, nobody cared about Linux. It was stupid. It was a little penguin. It was cute. It was supposed to be for desktop use. And then, have you ever tried to use Linux for the desktop? It's like, it's brutal, right? Like trying to get all your drivers to work. To this day, it's terrible, right? But Linux runs like almost everything on the back end of the internet, everything we do, right? It's incredibly valuable software. It's super important. The project has become super important, and it's just defined how the internet and our computing systems operate today, right? And Bitcoin is doing the same thing. Bitcoin was special. I talked about that because it was the first, and it set the stage for this. But that doesn't mean it's the only thing. And I have no idea what's going to come out of this. I don't know if it's money, investment, savings, like DeFi, who the heck knows, right? What I love about it is that Overton window has shifted, right? We are having conversations we never would have had before. There's a culture around it of like building things, doing things, looking at things from a fresh angle and trying things out. And now we have a financial system, a monetary system that is open source. Anybody can experiment, take the ball, run, do whatever the heck they want with it. And you know what? If it's better, you'll win market share. And that's the end of it, right? Like you either win or you lose in the market. And I want to say that when I talk about investment, I'm not just talking about, I'm going to go to Coinbase and buy some Bitcoin. George is going to buy some Bitcoin off me later. I'm sure of it. I'm convinced. What I'm saying is like investment of your time, your energy, like what you want to be involved in. In fact, if somebody asks me, what should I buy? What should I just go buy? I mean, unless there's like a family offer, something like that. If I'm talking to a normal human being who's just like making it happen out there, I say, buy the thing that you're interested in actually doing something with. doing it. Like, go build something with it. You don't have to be a software engineer. You can be a marketing person. You can be a business person. Find a project that speaks to you, work on it first. If you're working on these projects, if they're interesting to you, you'll become part of those communities. It happens fast. Anybody can do it. Just open your mind, make yourself available, become part of those communities, offer what you can offer, and you will find people who resonate with you. And maybe then you'll say to yourself, I'm actually willing to put some of my money behind this too. Maybe you won't. That's your choice.
Thanks, Patrick. George.
Yeah, I'm just going to say, maybe contextually, I would just make this point, and it's a behavioral sciences point. Traditional economists never intended people to grow wealth, and we just need to accept that very single fact. We continue to talk about capitalism and the free market. It was never intended for regular people to grow wealth, ever. And that concept came from Europe over to the US. And even as we've grown our economy, it's never been assumed that you could just regular person grow wealth, right? That's not a traditional economic premise. It is in behavioral economics through some type of interventions and nudges. What ends up happening is what I think we have heard is that people just contextualize it into whatever it is. As Jimmy said, it wasn't intended that way, but people are absolutely making it into what they want it to be. It may not have been an investment, but they are making it into investments. It may not have been a savings, but companies are using it as savings. It may not be like an investment, but that's the way it's being regulated. And so that's what we all need to realize. It is very interesting to actually make arguments from a traditional economics perspective, knowing that not at any time over the past 600 years or however long we've been practicing our traditional version of economics, has anybody reached out and said, hey, people, let me actually make you more equipped to participate in this market. At that point, all of these arguments become true. But until that happens, I will never agree that it is pure choice and you always have this option. It has never been that way. Right. And that's why people are more likely to get 75 basis points in a savings account than get anything in a T-bill. Right. And so what we have found is that people are going from, I will take 75 basis points in a T account to becoming a millionaire in crypto. That type of spectrum is not good for anybody until we acknowledge that they have not been given information that we can make this argument that it's free market capitalism and choice.
Alrighty. George, we're into our last 5 minutes. So if I could ask all of you in a minute or less to tell me, what's next for cryptocurrencies? What are some of the emerging trends that we should be looking at? What's on the horizon? Toma?
I'll just stay focused on Bitcoin. This is the only real crypto asset that makes any sense at all. And in 1 minute, I would leave it at that. It's scarce and secure, and it's the money of the future.
Jimmy?
I would tell the world that what will survive and not just be a fad, but a true game changer is utility and scale. Those two words, utility and scale. Digital currencies that have real utility and a blockchain that has usefulness for daily life for consumers and business and government, and scale, meaning it can handle huge amounts of transaction and data capacity, like the internet grew in capacity, right, over the years. So that usefulness can be brought to many, many people, not just crypto hobbyists, but billions of people around the world. And that's what we're trying to do with BSV. So focus on utility and scale, and then therefore you'll see that this world will be a game changer and not just a fad of Dogecoin, Shiba Inu coin, Sushi Swap, and the food coin of the day. Utility and scale.
Thanks, Jimmy. Alexandra?
I think there are two things. One is that I believe that the governments will take some part of this story through the adoption of the technology, and we'll see some changes into kind of a macro scale. And the second, I'll echo what Patrick said, ultimately, that if for the audience, if you are interested in some form of a crypto asset, it's very similar, I would say, whatever you need to do when you invest in stocks, figure out what kind of company, what kind of premises, what kind of ideas are behind it. And if you can, or if you accept those and if you understand those, then maybe it is something that you want to invest in. Thanks.
Alrighty. Thanks, Alexandra. Patrick?
Yeah, I would say that, we've talked a lot about sort of like people investing, like just random people. Just keep in mind, like right now, most of the people who are involved in these spaces are software engineers, right? A lot of them are coming out of the so-called FANG companies, right? And they're rolling up their sleeves and getting into these projects, and they're trying them out. But that isn't enough. That isn't sufficient. If you aren't a software engineer, if you're somebody else, don't rely on anybody on this panel to form your opinion for you. Get involved in these communities. Try it out. It's open source. Literally, I know I said it before, but anybody can participate in these things. There are no barriers, and that's the point. Get involved in things, try it out, see what it is. I mean, I hope there are a lot of young people in college here or grad students or something like that. You're perfect age to try things out. Get involved in these things, try them out, see what it means to you personally, and see what resonates with you. And you don't have to wait for somebody to give you permission to do anything in these spaces. That's the beauty of it. You just go and do whatever you think is best and where you can add value, and go for it.
Thanks, Patrick. And George.
Yeah, I mean, I hope that they will compare it to other investments so that way people can make better choices. And so in the short term, just make it part of the investment community, compare it to its peer group, and then let people make their choices from there.
Thanks, George. George Blount, Jimmy Wynn, Patrick Merck, Alexandra Andov, and Thomas Strolight, thank you very much for being part of this keynote debate today with the Tufts Gordon Institute. You were engaging, you were interesting, you were controversial, and I think the folks watching it today will have gone away with a great deal of information about cryptocurrency that they didn't have before. For those of you out there, please don't forget to fill out the survey for us. We'd love to have your feedback, and don't forget that in May we'll be coming back with our next keynote debate. We'll be looking at leadership post-pandemic. Should we be reimagining the role of the leader? To our amazing panelists and to you, the audience, for coming today, thank you very much indeed. Enjoy the rest of your day. Bye-bye.